All right, welcome back, y'all. The week has not started yet, so I'm trying to get this out to y'all in enough time so once the week does start, I can at least cover the basics for you so you can at least practice this in real time on a demo account. All right, we're gonna be talking about market structure today. In this video, we're talking about market structure, but even market structure has to be breaking down. So with that being said, let's get right into the video, okay? Market structure. Before we get into that, what are candlesticks? Okay, I trade candlesticks. These green and red bars on the screen, these are called candlesticks. All right, all these right here, that's a candlestick. The greens are candlesticks. We call the red ones candlesticks. These are all candlesticks. All right. With that being said, a candlestick is going to show you the buying pressure in the market. If you see a huge red candlestick, say like you see one right here, this red candlestick right here, or this red candlestick right here, you notice that that candlestick is bigger than, let's say, this one right here, or these right here. The bigger the candlestick, the more pressure it has. So if there's a huge red candlestick, that means there's a lot of pressure going into it. The red is sellers for me, the green are buyers. So you can see as the candlesticks get bigger, that's the direction that the market's going in. As the green sticks start getting bigger and bigger and bigger, you see that the market starts going up. Okay, right here the green candlesticks are kind of small. They're not really adding too much weight. All right, that's more of a liquidity grab. We'll get more into that later. But as you can see, this candlestick right here, a bar candlestick right here, full bar, and you can see what happens right after that. Okay, now that you understand what candlesticks are, when you see a red and green candlestick next to each other, they're either making a high or they're making a new low. Okay, so I'm going to be showing you guys the highs and lows in the market right now, because that's what moves the market. That's how the market moves. It moves in structures. It doesn't just continue going up all the time. It doesn't continue going down all the time. Excuse me. What it does is it'll make a move up. Like right here, you see a green and red candle, and then it goes down, makes a red and green candle. Then when it goes up, it makes a green and red candle. It goes down real quick, red and green, and then it starts shooting up, green, 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 green. But then once it wants to reverse, what does it do? You see a green candle, then a red candle. I mean, it starts falling down, then you see a red and then a green, and it starts going up. Why is this important? Why am I telling you this? Because if you can figure out when the market is about to reverse, then you could understand the market structure. If you see a whole bunch of red and green candles, the pattern most likely is going to be going down. If you see a lot of green then red candles, that's a lot of buying pressure. All right. So that being said, I want to be able to explain this. Is just so simple for y'all so y'all can really understand. But the basis of it, the basic way I could put it is, if you see a red and green candle or a green and red candle, it's either making a higher high or it's making a lower low in that area. If you see a whole bunch of green candles, you're not yet closed off on the high yet. I mean, the market can still continue to go up even higher if it wants to. Now, it can do that even if you do see a green and a red. But once you see that red candle appear into the picture, you can potentially see a reversal. All right, so that's just a way of being cautious, to letting everyone know. If you see green, 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 that's a good sign. Right now we're on the daily. So if you see green, 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 that's great. Buyers are in control. But if you see green and red, you might want to be a little hesitant, might want to be a little cautious, just to see if the market will reverse or if it will continue in that direction. Because like right here, for example, you see green and red candle right here, right? Green, red, but then the market continues to go up. Green, red, it continues to go up. Green, red, but then it drops a little bit. It actually had another red candle here, then goes green, and then goes up. So it's not going to be the same thing every time, which is why a lot of people tell you with the market, it's not 100%. No matter if you have a trading strategy or not, no one wins 100% in this Forex trading space. It's not possible to win 100% of your trades. If anything, the more you could get losing out the way now, the better. The more time you have on the demo account, the better, because you get a lot of that stuff out the way early on, and it'll help you. So that's just market structure, all right? Figuring out the highs and the lows of the market, okay? So now that you know what a candlestick is, now I can start showing you the highs and lows. So like I was telling you earlier, you see a green and red candlestick or a red and green candlestick, that's how you know it's at a high or a low. So right here, as you can see, let me pull out this arrow real quick for you guys. So green and red, right? This green and red is higher than this green and red candle. So that means this is a higher high than this high, okay? Remember I told you about the red and green as well. So red and green, this would be a low. What happens after this? After this high is made, it creates a new low. This low right here, is lower than this previous low. So that means the market can continue going down. It could continue dropping if it wanted to, but it just hit a fair value gap. I will break that down later on, but yes. So this low right here is lower than this low, and this high right here is higher than this high. So that's how the market moves, in higher highs and higher lows. What we want is the market to trend. So we want to see continuous higher highs. So we want to see a higher high. It's a low right here. Let me space this out a little bit. We want to see this high get beat. If you want to, on the bullish side, the bulls are just saying that the buyers are winning. If you want the bulls to win, you want to see this high get broken. And what happens here? This high gets broken, makes a new high. Then this high gets broken, makes another high. It makes a little low, then makes another high. Because again, every time you see green and red candle, if this high is higher than this high, then that means the market is continuing in that direction. Even if it does do a little retracement and go and fill this fair value gap, green and red is up here. Now, if it stopped like down here, we would be a little cautious and want to see if the market is going to reverse on us. But in this case, in this scenario right here, it's going in the uptrend. So green and red, this green and red is higher. This green and red, what happens? It's shorter. Okay, so then you'd be cautious, and you can see the market drops down even more. Now, does it continue to reverse all the way down here? No. Does it reverse all the way down to this low? No. So what does that mean? That means that the market is still in an uptrend. It broke a low. That's going to fake out a lot of people. But in the long run, if you can understand that as long as the market doesn't continue dropping in that direction, doesn't continue clearing these lows, you're still in an uptrend market. It has more than enough time and money in the market to take your stop loss out down here. If you had a stop loss right here, it could take you out and then continue going in that direction. All right. So let me explain it the other way around, vice versa as well. We got the bulls out the way. So now this is saying, what if the sellers are taking the lead, right? You can see at the higher high right here, another higher high, a higher high. Then what happens right here? We got a lower high. You see that green and red candle right here? This green and red candle is lower than this one. It's a potential reversal. So what does it eventually do? It breaks down. Green and red goes down. Green and red goes down. And the more that you can see that, you'll be able to identify how the market is moving. Because like I said, the market moves in higher highs and higher lows. Higher highs, higher lows for bullish or the winner, a buyer side, or it could be moving lower highs, and lower lows, depending on who's winning. If the sellers are winning, it's going to be lower highs and lower lows. If the buyers are winning, it's going to be higher highs and higher lows. All right. Then you can see like little liquidity grabs and stuff down here, but that's market structure. As long as you can understand that, you are well on your track to understand how the market is moving and seeing what it is that is actually going on. It's not too complicated. It's actually it can be very simple. The more that you do it, the more that you see it on your own screen. But yeah, that's market structure. Waiting to see, on my case, a green and red candle means it's going to be going lower. If I see a red then green candle and that keeps getting broken, then we're going to be going up. without further ado, hopefully you liked the video. Hopefully you learned something. And thank you for watching. Make sure you like, comment, subscribe for more.